What's a good rate of return on an apartment complex? Let's measure that and determine how you should calculate a rate of return. So 40% of your income that you receive should be going towards the expenses of the property. Now, what does that entail? That should include your property taxes, your insurance, your property management, maintenance and repair, landscaping, plus I like to throw in a little for reserves. What goes into the reserves? That's everything from having to replace a hot water heater in the future to putting on a new roof or saving money if you want to add vinyl windows or make some big improvements down the road. So right off the bat, figure 40% of that income that's coming in is going to go to your operating expenses. Now, does that mean you get to keep the other 60% as a profit? Not so fast. So your option is you either pay all cash for the property and then you get to keep the profit, or you need to service your debt. So let's look at some easy math on how much you're going to actually get to keep for profit after you pay for your mortgage. Let's say you have a 20-unit apartment complex and each unit is renting for $1,000 a month. That would generate $240,000 in yearly income. 40% of that for expenses would be $96,000. That leaves you $144,000 in net operating income. Now, let's say you want to take out a 75% loan to value. I did some quick math, and at $144,000 in net income and a 5.5% cap rate, that puts the property around $2.4 million. So I did a 75% loan. That would get you a loan at $1.8 million. Then I did a 30-year amortization and I built it in around a 4 to a 4.25% interest rate. So your monthly debt for just principal and interest, because remember the taxes and the insurance are already factored in as expenses, the debt is around $105,000 on an annual basis. So that leaves you profit of $40,000 on an annual basis. And again, that's after expenses, and that's after you've serviced or paid your debt on a monthly basis. So that's $40,000 in profit to you. If you take $40,000 and you divide that by 20 units, that gets you $166 profit every single month. And I can tell you that's the sweet spot for most investors, where they say, yes, I'm building equity in my property. The property is appreciating in the market. My tenants are paying down my mortgage debt, and I'm able to pocket $166 per unit. That's a win for me. I'm going to buy that property. So that's a quick and easy way to measure the rate of return on the property. I also like to look at, okay, if I bought it today and I put improvements into it, how much could I sell it for in the future? So that's a value add opportunity where you're weighing out how much would it cost me if I went in and totally gutted that unit and put in a brand new kitchen, all new appliances, all new countertops, new flooring, new cabinets. How much would that cost me? And then what could I get in return for the new rents? That's a value add opportunity. The other opportunity would be to look at if you took the property at market rent versus where your rents are. I have a lot of investors that are excited about increasing rents. Now, you have to remember, you have to pay attention to what your local and state guidelines are. For the state of Oregon, as an example, you cannot raise rent higher than 9.2%. So be aware if you have local or state restrictions on how high you can raise rent. But a lot of clients look for that market rent opportunity if a property is under rented. Where do I see those under rented properties? It's typically by mom and pop investors who have owned that property for multiple years, and they just have been slow to raise rent because they don't want to rock the boat with their tenants. They love their tenants, they want to keep them there, but now they're tired and they want to sell the property. That's a great opportunity where you can check and see if you can gain market appreciation and increase to market rents. Click on the link down below to sign up for my newsletter on tips and strategies for apartment investors. I'm Rene Nelson with Pacwest Commercial Real Estate. Have a fantastic day.